Thursday, June 10th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at Basel3 and gold and whether the rule changes coming up on June 28th as it pertains to unallocated gold is a big miscalculation by the Keynesians. And I'm going to refer a piece by Rafi Faber of the Endgame Investor. He touched upon that yesterday, and I think he's got a good theory about that. Before that, though, I'd like to make a few announcements. Last year when we had the pandemic, I did try to contact different mints about having a Billy coin, a silver Billy coin, a 1 ounce coin, or any kind of coin or metal. And none of them came back. A lot of them were closed. And I've seen recently in the comment section that a lot of you would like a silver Billy, or whatever it would be called, a 1 ounce round with Billy on it. I think it would be really popular. I've contacted mints again. Some of them have come back, some of them haven't. So it's not as simple. One of them, Sunshine Mint, who do custom minting, said that because of contractual commitments, they couldn't look at my request. And basically the lady there said what that meant is that they're like really busy and they don't have the capacity to mint Billy coins. The other one, PAMP, which is a Swiss mint, they said I'm too small. They only deal with wholesalers. And another mint that I've contacted hasn't come back. So I'd love to have a Billy silver coin minted. I would buy a few, and I'm sure you would as well. But at the moment, it's difficult, but I'll keep trying. What else is there? I'd like to recommend a very interesting video that I watched the other day from a YouTube channel called Macroaggressions with Charlie Robinson. I've interviewed him on my channel before. I think it was last year. You can search my videos, do it through writing Charlie Robinson maybe, and or I'll find it and I'll put it up in the cards and below in the description for you guys. But you need to subscribe to his channel. He needs more subscribers, I think, and viewers. He's only got 5,000 subscribers and he's got really good material. But the other day he had someone on who's written a pictorial, a mix of a pictorial and written book. And the video was published on June 7th, so just a few days ago. It's called The Biggest Scam in History. And he speaks to a guy called Etienne de la Boétie squared. That's the guy's nom de plume, so to speak. He hides behind that name because he's still in the corporate world. He's a Texan, though, I think, so he's not French. But he's only got 1,500 views for that video, and I think he should have hundreds of thousands, really. So please, think about watching that, have an open mind, and maybe even share it if you like it. Maybe subscribe to Charlie Robinson's channel. So now to Basel3. Could the Keynesians, and by Keynesians I mean the people running the BIS, the people running all the central banks, the economists, a lot of the traders in the system as well. They seem to think that gold, for example, is not that important anymore. So they actually don't realize the repercussions sometimes of their changes. A lot of the times as well, these Keynesians, economists and bankers, they're academics. They haven't really been involved in the markets like I have and others have who have had decades of experience of trading, not only in the futures or derivatives market, but in the cash market. They understand the consequence of changes of rules like Basel3. And I also recommend, if you want to learn more about Basel3 as it pertains to gold, to watch a video from about a week ago from Kinesis Money, where Andrew Maguire explains what's going on, and I'll put it up in the card, the video, and in the description below. And it's entitled Live from the Vault, BIS Caves to Russia's Gold Buying Pressure, Huge Impact on Gold and Silver. Yes, there are those who think the BIS has been pressured by the Russians and the Chinese to make these changes to unallocated gold. It's just speculation. Rafi, of course, has another speculation, another opinion on the subject, and I think it's worth considering it. And I'm going to come to his opinion in a minute, because it actually corresponds to what I've heard in the past, even about Milton Friedman. I heard that back in the early 70s, when Nixon closed the gold window, even Milton Friedman, who's supposed to be a free market advocate, and he was, he said that gold would become almost useless and go down to almost zero. But he was no sound money advocate, Milton Friedman, and that was a huge miscalculation by Friedman. And also the Keynesians, they thought Nixon closes the gold window, the gold problem will go away. And what's the gold problem? Well, it's the public demanding physical, and the big guys, sovereign guys, the central banks losing physical. So they thought that by closing the gold window, the problem would go away, but it didn't, because the price went almost straight up to like a 200 by, I think, 1975. And then, of course, they had to start the COMEX gold futures contract to tamp down and discourage the public from buying physical. And eventually, we went to almost $1,000. Well, we went to just below 900 in 1980. So they were completely wrong about that. And that's what Rafi's talking about. And if you want to learn a little more about what Basel3 really is, go to the BIS website, and I'll put a link to it in the description. I'm putting a lot of links today in the description, but sometimes you need to look at things as well, do a little bit of research. So Basel3 is not just to do with gold, it's to do with the international regulatory framework for banks. And it says here, Basel3 is an internationally agreed set of measures developed by the Basel Committee on Banking Supervision in response to the financial crisis of 2007 and 9. The measures aim to strengthen the regulation, supervision, and risk management of banks. Again, the fact that it's number 3 is not encouraging, because it means that number 2 and 1 weren't good enough. So will number 3 be good enough? So you can see that they say here, finalization of the Basel III post-crisis regulatory reforms. It's been going on for like 10 years. So what's happening in gold on June 28th is not the whole Basel III thing. It's just part of the process. Just wanted to explain that there. So let's go to Rafi's newsletter. I'm going to reference it. Before I look at it, I'd like to say, if you are into economics, if you are into trading a little bit as well, I highly recommend you subscribe to Rafi's Endgame Investor newsletter. It's on seekingalpha.com. He goes under the pseudonym of Astrolib, the Endgame Investor. I'm going to put a link to his newsletter below in the description. And I don't think it's going to cost you an arm and a leg. It's just over a couple of $100 a year. And aside from giving his opinion on the markets and trading, he covers a whole range of subjects. He also talks about the psychology of investing and trading, which is a good thing. So here we go. He says, I was looking last night and I found a Murray Rothbard quote I was looking for. I try to answer the question of why the international banking cartel would be so crazy as to go ahead with Basel3 regulations, even though they could end up squashing the paper gold derivatives market, unallocated gold positions basically, pushing the price of physical gold much higher and thereby killing paper currencies. For new subs, basically Basel 3 strips gold derivatives, futures mostly, of asset status, so banks can no longer use them to fund liabilities and will therefore stop buying them, potentially killing the paper gold market. My answer was that they think that killing the paper gold market will kill the gold price because they do not understand that gold is money and sovereign currencies are only increasingly mutilated gold substitutes. Just like they thought that ending Bretton Woods, the final backing of the US dollar with gold at $35 an ounce, would kill the gold price 50 years ago. This is from What Government Has Done to Our Money, with Rothbard speaking about the ending of Bretton Woods. So that's the book here. I've recommended it many times on the channel. It's a must read if you want to understand money and the system, by Murray Rothbard. There are free PDFs for this, or you can go to the Mises.org website and buy it from there, or on Amazon, wherever you want to go. So this is what Rothbard says in the book. All pro-paper economists, from Keynesians to Friedmanites, were now confident that gold would disappear from the international monetary system, cut off from its support by the dollar. These economists all confidently predicted the free market gold price would soon fall below $35 an ounce and even down to the estimated industrial non-monetary gold price of $10 an ounce. Instead, the free price of gold never went below 35 and had been steadily above 35, and by early 1973 had climbed to around $125 an ounce, a figure that no pro-paper economist would have thought possible as recently as a year earlier. So this is Rafi's conclusion. So this is just a mirror image of the ending of Bretton Woods. Ending the paper gold market will channel demand for gold into physical markets. It's paper gold that is suppressing the physical price, not fueling it. I agree. It creates false supply, right? They are so far up their own monetary derrieres, they just can't understand that they may be destroying their plans for world domination, which is impossible anyway. If it were possible, somebody would have done it already. Whenever it's achieved, it immediately crumbles. So I would add as well that there's a guy who wrote something a few days ago, and he's part of this LBMA paper scheme. Yes, he has been a bullion dealer in London. He's well known in the gold circles, and he ran a firm called Sharps Pixley. They used to be an LBMA member. They used to do the fixing of the gold price many decades ago. His name is Ross Norman. He wrote something on June 2nd. He said, Basel 3 and gold, central bankers locking the fire exits. And this is his conclusion. And this is what Rafi is saying. These people don't understand that it's not the dollar that is important and that supports the gold. It's gold that supports the dollar, right? And it's gold that it's money and not the fiat currencies. So this is Ross Norman's conclusion. to what he thinks Basel3 could do. And it matches this thought by Rafi that they don't understand what they're doing. It says in the 1970s, gold represented about 6% of total assets under management. Today, it is about 0.5%. Expect that figure to fall further as gold becomes increasingly niche and less relevant. That sounds a lot like the Keynesians and Friedmanites of the 70s. Tragically, too much attention has focused upon the narrow desire to bash bullion banks. Well, that's because the bullion banks act criminally in the gold and silver market, Mr. Norman, which has served as an unnecessary distraction in that it is making the real story being played out here. So he's an example of someone who doesn't understand gold, even though he's part of the gold market. He's been in the gold market for longer than I have. But he's part of this paper game, right? So what's my conclusion? Is June 28th going to lead to a massive increase in the price of gold and silver? I don't know. Is it going to have an immediate impact on the paper market like comex and unallocated LBMA? I don't know. But it's possible. And even if this wasn't happening, this Basel 3 unallocated rules for gold, I would still be stacking precious metals because the central banks, the governments, they're not going to stop doing what they're doing. The only thing they know in terms of economics is that the government has to keep helping the economy. The central bank has to keep printing money. And yes, it will be interesting today. Of course, we have the CPI numbers coming out. They come out at 8:30 Eastern Time, 1:30 p.m. London. And I've seen that the 10-year yield has been dropping quite sharply. We're now below 150, around 147. And that's despite the fact that the market or economists expect a rate of around 4.6% year on year for the CPI. And it seems a bit contradictory that the bond market is actually rallying and yields are falling. Maybe the bond market, aside from being manipulated by the central banks, is giving their vote that they think this rising prices that we're having, that many people call inflation, which is wrong, of course, is transitory. Maybe the market knows better, but we'll have to see. Or maybe it's just part of the financial repression. And what's financial repression? Well, it's when the central banking authorities and the banks work together to keep interest rates suppressed while they inflate the system and prices rise. And they basically rape investors of their wealth in order to write off the massive amount of debt that they've created. That's what they did in the post-World War period up until 1980, when it was a really, it was a period where it was a really bad thing to have bonds because it was basically called certificates of confiscation. But we'll have to see. I have a feeling it's going to be a very high CPI number. And I think the markets will get very volatile this afternoon or in the morning in New York, afternoon London. So with that, let's quickly look at where we are this morning in terms of the markets here in Europe or London. It's just before 8 a.m. So spot gold and silver are being kept suppressed here right now. Yes, the bond market is rallying. The real yields are going more negative and negative. That should be positive for gold and silver. We've been told in the last 9 months that gold hasn't gone up because yields had gone up, So, but now yields are going down and gold and silver are doing nothing. So right now we're at 1885, down 3. A range has been 1882 to 1889.90. Silver's down 8 cents, 27.68. Range has been 27.61 to 27.85. The Dow is up 26 points. Dow future, NASDAQ 100 futures down 12. S&P is unchanged. Sterling is unchanged, 141.13. The euro is down very slightly at 121.71. Dollar is down 0.2% versus the yen at 109.50. Dollar, coming back down versus the yuan. We went up to around 640 recently. Now we're at 637.87, down 1/8%. The Aussie dollar is at 77.41, up 1/8% as well, the Aussie dollar. WTI crude 69.50, down about 0.5%. High grade copper is down about 2/3% at 451. 10-year yield, as I said, is moving lower here. It's at 148, down 1 basis point. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on all these platforms below here. So I wish you all a great day. Take care. Bye.